Hi, welcome back to another podcast with Mr. Hagan. And on this podcast, we're going to look at the 2018 tax bill that I'm making this video in February of 2018. So this is going to be the new law that just got passed, the 2018 tax bill. And here's what it says. Well, first of all, here's my example. We're going to do an example here where there's going to be 4 children there's a family of 6. Sorry about that. There's going to be a family of 6. Okay, here we go. There's going to be a family of 6, and they're going to have 4 children. And mom's making $135,000 a year. Dad's making $55,000 a year. And the new standard deduction, if you are married and filing jointly, is $24,000. So that's a big standard deduction. If you're single, then it would be half of that. And then we're going to assume that this couple is going to put aside $15,000 a year in retirement contributions, and the tax credit with the new tax bill is up to $2,000. So that's a big tax credit per child. And then our tax brackets for married filing jointly is going to be these numbers over here. And if you're single, it would just be half of these, except for this last one. I forget what the number is. It might go up to 500,000. I shouldn't say. I forget. But the single brackets are half of these brackets, except up here at the end. There's kind of some odd stuff that happens, and you could go look that up if you were really interested. If you're making that much income up there. Okay, so let's do the calculations for this family. So the first thing we got to know is how much income are mom and dad making together. So there's $135,000 for mom plus $55,000 for dad. So they're at $190,000 of income. So I'm going to write that right here. $190,000 of income. And remember, step number 1 is we subtract away deductions. That's step number 1. So we're going to subtract away $24,000. That's the standard deduction that gets subtracted away. And we're going to subtract away the retirement contribution. Mom and dad are together putting away $15,000 into 401ks, 403bs, or traditional IRAs, whatever it might be. And so now we just got to do the calculation. The 190,000 minus the 24,000 minus the 15,000, and we get a taxable income of $151,000. Now remember what that means. They earned an income of $190,000, but they're only going to pay taxes on $151,000 of that. That's their actual taxable income. Okay? Now, we take that taxable income and we work it through the brackets. So the way that I did it was we drew this tax line. Let me just change my color here. And so we're going to have a tax line. And the tax line is going to go from 0 to $151,000 of income. That's going to be my tax line, and of taxable income. And then we got to work through the bracket. So the first bracket is going to go from 0 to right here to $19,050. So that's going to be the first bracket, $19,050, and that's getting taxed at 10%. And then the next bracket is going to go from $19,50 to $77,400. So let's see, that's going to be $77,400. That's going to be maybe right here, $77,400, and that's going to get taxed at 12%. And then finally, they're going to, we get into 22% tax bracket, $77,400 up to $165,000, but their taxable income stops at $151,000. So that's where we'll stop. So we go from $77,400 up to $151,000. That's going to get taxed at 22%. That's going to get taxed at 22%. So now let's go ahead and do my calculations. So remember how we're going to do this. We're going to go top of the bracket minus the bottom of the bracket multiplied by the tax rate. So this is going to be $19,050 minus 0. So there's $19,050 in this bracket multiplied by 10%. And so that's going to be $1,000. $905 of taxes just in that bracket. Okay, now we get into the 12% bracket. So how much income is in there? Well, we got to do the top of the bracket, which is $77,400, minus the bottom of the bracket, which is the $19,050. That was right here. So there's $58,000 of income in there, actually $58,350 to be exact, multiplied by the tax rate, which is 0.12. Multiplied by the tax rate, which is 0.12. And so the taxes owed in here would be $7,002 on this income, $7,002. And then finally, the last bracket, top of the bracket minus the bottom of the bracket, multiplied by the tax rate. So that's $151,000 at the top of the bracket, minus $77,400 at the bottom of the bracket. So we have $73,600, $73,600, and that's going to get taxed at 22%. So that's going to be times 0.22, and so let's see, times times 0.22. That's going to be $16,192 of taxes. $192 of taxes. Okay, so a lot of taxes in there, and then we got to add all these up. Okay, and that's going to get our final number. So we have the $16,192 plus $7,002 plus $1,905, and that's going to get a total tax bill of $25,099. So that's a lot of taxes to pay, but we're not done, because remember, the last step is they get a tax credit, and this family is going to get a big tax credit because they have 4 children. So remember, your tax credit now is $2,000 times the number of children, which is 4. So it's going to be 2,000 times 4. They're going to get a tax credit subtracted off on the end of $8,000. That's a big deal. So instead of owing $25,099, they're going to owe $25,099 minus $8,000. They're actually going to owe $17,000. That's still a big tax bill. $17,099. That's their taxes owed. So I record right here, taxes owed, $17,099. Okay, what was their average tax rate? Their average tax rate is you take that $17,099 divided by the $130,000. That was the sorry, it wasn't $130,000. It was $190,000. Back that up. They made $190,000 of income, and then you multiply that by 100, and so let me run those numbers. Divided by 190,000, and then multiply that by 100, and that gives you an average tax rate of 8.99%. 8.99%. So really just about right at 9% is their average tax rate. And then their marginal tax rate, the bracket that they're in, is 22%. That's their marginal tax rate under current law. Now, I didn't go through all the possible. There's all kinds of other deductions and credits and so forth. There's a lot more details to the tax law. I'm just doing the basics. Okay, the standard deduction, the retirement contribution deductions, child tax credit. Those are kind of the basics that hit a lot of people. And so this is your 3-step process for doing your taxes. We just walked through the 3 steps. So step number 1 was subtracting deductions. Step number 2, that was my tax line, doing the calculations. And step number 3 was subtracting away the tax credit. Those are the 3 steps to this process. Subtract away your deductions, do your calculations, and subtract away your credits. All right, this has been Mr. Hagan on another Econ podcast. Thanks for joining me, and we'll see you on the next podcast.